Hello everyone. Welcome back from the break. We jump straight to Chapter 2 of this policy, which is Money or Cash in Transit Policy Coverage Details. Just a reminder from our last presentation, money or cash in transit coverage is a type of insurance that provides protection for businesses and organizations when transporting cash, securities, or other valuable assets from one location to another. The coverage details of a cash-in-transit insurance policy may vary depending on the specific insurer and the policy terms. Now, we are going to look at coverage details, listing sections of this policy. These sections will define circumstances, times, and other events from which a claim can be lodged under the policy. The sections or insured events under a money or cash-in-transit insurance policy also outlines the specific risks or events for which the policy provides coverage. These sections may be categorized based on the types of risks covered. While the specific policy wording may vary, here are some common insured events or sections found in such policies. Below are coverage details, or sections of money insurance policy. Section 1 – Coverage of cash during transit, also known as cash in transit. This section of the policy provides coverage for cash and valuables while they are in transit from one location to another. This includes transporting money between the insured's premises and banks, ATMs, or other designated locations. This coverage provides protection for cash, securities, or valuable assets while they are being transported from one location to another. It is designed to safeguard businesses and organizations against financial losses that may occur during the transit process due to various risks and perils. Coverage during transit is a critical component of cash-in-transit insurance, providing businesses and organizations with financial protection and peace of mind while their valuable assets are on the move. To ensure comprehensive coverage, businesses should carefully review the policy terms, including any exclusions and limitations, and work closely with their insurance provider to tailor the coverage to their specific needs and risk profile. Section 2 – Coverage of cash while kept on premises during business or working hours. Coverage, while kept on premises during business hours, is another important aspect of money or cash-in-transit insurance. This coverage provides protection for cash, securities, or valuable assets while they are located within the insured's premises during regular business hours. It is designed to safeguard businesses and organizations against financial losses that may occur while handling cash or valuable items on their own premises. Coverage while on premises during business hours complements the money or cash-in-transit coverage during transit. Together, these insurance components provide comprehensive protection for the assets of the insured business or organization, whether they are being transported or managed within the premises. Businesses should carefully review their policy to understand the extent of coverage while in premises during business hours and any additional requirements or conditions imposed by the insurer to maintain this coverage. Section 3 – Coverage of cash while kept on premises outside business or working hours, i.e., when the business is closed for the day or a weekend. This section provides coverage of cash while kept on premises outside business or working hours, such as when the business is closed for the day or over a weekend. It is essential for businesses to review the policy terms and discuss with their insurance provider to understand the extent of coverage during non-business hours. Money or cash-in-transit insurance policy offers coverage for cash and valuables kept within the insured premises outside business hours, typically referred to as in-storage coverage or in-premises coverage. It's important to note that some standard money or cash-in-transit insurance policies may not automatically include coverage for cash kept on the premises outside business hours. In such cases, businesses can explore additional coverage options, such as a separate in-premises coverage endorsement, to extend protection for their assets during non-operational hours. As with any insurance policy, businesses should carefully review the terms and conditions, discuss coverage needs with their insurance provider, and ensure that their cash and valuables are adequately protected both during business hours and non-business hours. Tailoring the policy to the specific needs and risk profile of the business is essential for comprehensive protection. Section 4 is coverage for cash in the hands of authorized company employees. Section 3 of a money or cash-in-transit insurance policy typically pertains to the coverage for cash in the hands of authorized company employees. This section provides protection for cash, banknotes, coins, and other negotiable instruments that are in the possession of designated and authorized employees of the insured company. It is crucial for businesses to carefully review and understand the coverage details of this section in their money or cash-in-transit insurance policy. By doing so, they can ensure that cash in the hands of their authorized employees is adequately protected while being transported or handled during their regular duties. Compliance with any security requirements and adhering to best practices for cash handling can help businesses maintain coverage and mitigate potential risks. Additionally, businesses should be aware of any exclusions or limitations in the policy to avoid gaps in protection. Circumstances that may lead an employee to carry or store business cash in their residences. Carrying or storing business cash in an employee's residence should generally be avoided due to the increased risks and potential security vulnerabilities involved. However, there might be exceptional circumstances where such actions are deemed necessary or unavoidable. Some of the situations that may lead an employee to carry or store business cash in their residences include emergency situations. In some cases, unexpected emergencies or unforeseen events may arise, such as natural disasters, fires, or accidents at the workplace, which could require an employee to take immediate action to safeguard the cash by temporarily transporting it to their residence. Remote locations. If the business operates in remote or underserved areas where access to banks or secure cash handling facilities is limited, employees may have no choice but to temporarily store or carry cash at their residences until they can safely deposit it. Banking constraints. Delays in banking services, such as bank closures or disruptions, might compel employees to temporarily hold cash in their residences until they can deposit it in the bank during regular business hours. Cash-intensive business activities. Certain businesses, such as seasonal enterprises or small vendors, may conduct cash-intensive activities that lead to high daily cash inflows, making it difficult to deposit the entire amount in a bank immediately. Security transportation concerns. In certain high-risk areas where security transportation services are limited or unavailable, employees may take on the responsibility of transporting cash from the business premises to a safer location, such as their residence. It is crucial for businesses to have strict policies and protocols in place to prevent or minimize the need for employees to carry or store business cash in their residences. Instead, businesses should explore other secure alternatives, such as using armored transport services, secure storage facilities, or banking cash promptly during regular business hours. Employees should be well trained in cash handling procedures and security measures to minimize risks associated with cash transportation. Adequate cash-in-transit insurance coverage should also be in place to protect against potential losses that may occur during cash handling and transportation, regardless of the location. Ultimately, carrying or storing business cash in an employee's residence should be a last resort and only considered under exceptional circumstances, with strict security measures in place to safeguard the assets. Section 4's coverage of damaged safes, cash registers, and strong rooms. Section 4 of a money or cash-in-transit insurance policy typically deals with the coverage for damaged safes, cash registers, and strong rooms. This section provides protection for the insured's cash storage facilities and equipment in the event of damage or destruction caused by covered perils. Coverage for damaged safes, cash registers, and strong rooms is essential for businesses that handle and store cash on their premises. Having this coverage ensures that the insured's cash storage facilities and equipment are protected against unforeseen events that could result in financial losses. It is essential for businesses to maintain and adhere to proper security measures to meet the insurer's requirements for coverage. As with any insurance policy, businesses should carefully review the terms and conditions of Section 4 in their money or cash-in-transit insurance policy to understand the extent of coverage and any exclusions that may apply. Working closely with their insurance provider will help tailor the policy to the specific needs and risk profile of the business, ensuring comprehensive protection for their cash storage facilities and equipment. Section 5. Coverage for estimated annual carry. Coverage for the estimated annual carry in a money or cash-in-transit insurance policy typically refers to the protection provided for the total amount of cash or valuables that a business or individual is expected to carry or transport during a specified period, usually 1 year. This coverage is designed to safeguard against the risks associated with handling and moving cash or valuable assets from one location to another. Key points related to coverage for estimated annual carry may include: 1. Declared amount. The insured must declare the estimated annual carry amount to the insurance provider during the policy application process. This declared amount represents the maximum value of cash or valuables that the insured expects to carry or transport in a year. 2. Transit coverage. The policy will provide coverage for cash and valuables while they are in transit between locations specified in the policy, such as between the insured's premises and banks or other designated destinations. 3. Storage coverage. Coverage may also apply to cash and valuables kept in storage, such as safes, vaults, or strong rooms on the insured premises, subject to the limits specified in the policy. 4. Geographical limits. The policy will specify the geographical areas within which the coverage is valid. The estimated annual carry coverage will apply to transit and storage activities within these designated regions. 5. Security measures. Insurers may require the insured to adhere to specific security measures when carrying or storing cash, such as using armored vehicles, GPS tracking systems, and secure cash handling procedures. 6. Employee dishonesty coverage. Some policies may include coverage for losses caused by dishonest or fraudulent acts of the insured's employees related to the estimated annual carry activities. 7. Limit of liability. The policy will indicate the maximum amount the insurer will pay in the event of a covered loss related to the estimated annual carry. 8. Deductibles. Deductibles represent the portion of the loss that the insured must bear before the insurance coverage comes into effect. The policy will specify the deductibles applicable to different types of claims. It's crucial for businesses and individuals to accurately declare the estimated annual carry amount to ensure they have adequate coverage for their cash transportation and storage activities. The insurance premium for this coverage is typically based on the declared amount and the level of risk associated with the cash-in-transit activities. As with any insurance policy, it's essential to carefully review the terms and conditions of the money or cash-in-transit insurance policy to understand the specific coverage, limitations, and exclusions related to the estimated annual carry. Working closely with the insurance provider can help tailor the policy to the insured's specific needs and risk profile, ensuring comprehensive protection for their cash handling and transportation activities. We end this chapter here. Next, we will discuss the key components of money insurance policies. We will be back shortly. Stay tuned.